What is an unwarrantable or non-warrantable condo complex? That's our topic today. We'll get started right after this. An unwarrantable condo complex is one that does not meet the guidelines necessary in order to get a loan, either an FHA, VA, or even a conventional loan. These are requirements from Freddie Mac or Fannie Mae. Hi, I'm Kim Ward. If you're new to our channel, please like, subscribe, and if you have questions, post them down below. Hit that bell button to get our weekly videos all about real estate. My team and I, we help executors, administrators, and trustees with homes in probate or trust administration here in San Diego, California. Now let's get down to what is an unwarrantable condo. There's three common reasons why Freddie Mac and Fannie Mae consider a condo complex unwarrantable. The common reasons are the insurance situation, which is what I'm involved with right now. That there's insufficient insurance coverage, which means over the entire condo complex. Here in San Diego, we are starting to experience, and I've just had my first experience, that's why I'm making this video for you, of unwarrantable condos. This has been happening in areas like Florida for quite some time. And what an unwarrantable condo is, basically, they can only sell it for cash. The second is high investor concentration, which means there's a lot of rentals in the complex. And the third, probably less common, is that there's a high amount of the HOA fees for each individual condo that are in arrears. So what that means is, in arrears means that the people are not paying their HOA fees. And maybe the HOA board is tacking on more fees, trying to get them to pay, and sometimes they actually get turned over to an attorney and a collection agency so that they can get those fees and be able to pay all the bills for the HOA. Let's skip into HOA fee management. The way an HOA works generally is there's a board of people that are in charge of the HOA. There's usually a company that actually collects the funds and handles any repairs and all that. But the HOA board, they're the ones making the decisions and handling any real problems, although they hand that over to the management company to put into place. The situation that we're involved with right now, which prompted this video because we just went through a huge amount of education, is the HOA board. They lowered the amount of insurance on this particular condo complex. The insurance over the whole complex was $101 million, and in February they adjusted that to $50 million. So they cut it in half. They did this to keep the monthly HOA fees low for all the people that own the condos. But the reality is now they can't sell them except for cash, so that is affecting the saleability of each one of the condos and probably is going to equate into a much lower sales price. I believe that the HOA board really didn't realize what they were doing. They were just trying to save money because insurance costs have gone up a lot in San Diego, well, in California, and they were just trying to save money for all of their owners. They have now been informed of what the issue is, and the real concern is that if there was a catastrophic event, let's say all of the condos burnt down, the owners would not be made whole at this time because there's not enough funds or there's not enough insurance to cover if there was a catastrophic event. And that's why it's now an unwarrantable condo complex. And the reason that lenders now are not going to want to loan on this is because it's much riskier for them. If there was a catastrophic event, they would be stuck holding a loan with no property and no payments to cover that loan. So now these are the consequences of the unwarrantability of a condo complex. The buyers now have limited financing options. Once we became aware of what the problem was, we started looking into what options there are. And there are some lenders that will loan on an unwarrantable complex. Of course, it's going to cost the buyers more. They're going to have a higher interest rate. They have to have a minimum of 20% down, and they have to get a special insurance policy that's called an HO3 policy. I own a single family residence that I live in, and I have an HO3 policy on my home. With condos, they typically are insured by the HOA, by their funds that they pay, and it gets paid into a master insurance policy. And then each owner should have an HO6 policy, which basically is a lesser policy that covers the owner of the property and the lender from the paint in, meaning that if there was a fire, for instance, the HOA would rebuild the structure up to the drywall, and then the HO6 policy would step in and complete the rest of rebuilding the property with tile and kitchen cabinets, appliances, carpet, doors, etc. Now the understanding is that the HO3 policy that a buyer could obtain, or even an owner in one of these complexes that are unwarrantable, they would be made whole if there was a catastrophic event, because just like living in a single family residence, the entire building would be rebuilt by the HO3 policy. And I shared with you that we are involved with this right now. We have some clients that are responsible for their loved one's home. We were in escrow at $35,000 over the list price, and 2.5 weeks into this escrow, we found out about this issue. We tried to keep the buyers and their agent wanting to continue on with the transaction, even when we found lenders that were able to give them the right policy, and they were putting down 30%, but they were first-time buyers and they were afraid and they walked away. And so now our clients are going to be selling this property most likely for much less. And the really sad part is that these buyers had already paid for an appraisal, which came in at value. They had paid for an inspection of $600 when they went and found a different lender that their agent said she thought that they could do this kind of loan, but they couldn't. They ended up paying another $700 and some for an appraisal. So these poor buyers were into this property for a few $1,000s, and they just couldn't stick with it, and they walked away, losing all those funds. Understanding what makes a condo complex unwarrantable is crucial, and knowing the right people that can get the right loan, if you need to get a loan, is also a critical thing. That's what we do for our clients. And what we learned from this experience is that from this point on, part of our system is going to have for us to contact the HOA and make sure what kind of insurance they have on the property, so that the next client that may have this issue isn't blindsided like our other clients were. I know this was a lot of information, and I hope you find it of value. If you should find yourself in this type of situation, what you need to do is first contact the HOA board and let them know how this is affecting you. Second is to find a knowledgeable real estate professional that can help you to find a lender that would be able to actually do a loan on the property. And third, you're going to want to ask your agent prior to putting the property on the market to put together a list and information for any buyer's agent, so they will understand that the property can get a loan. It's just a little more tricky. Hope you found this of value. If you did, please like, comment, subscribe, and if you have questions, post them down below. We'll see you next week.